This morning I wanted to talk about two things. Firstly is talk a little bit more about China and just kind of reinforce the debate of last week. And then I'll talk about the Australian CPI, which is out later today, and what I think that the influence of that might be, the enormous influence that might be on what the RBA does next week. So last week I wrote a piece about the Chinese CPI, which came out at year-on-year 6.8%, and I said that that was the number that we'd put in the survey. Other firms such as Goldman's had put in year-on-year growth rate of 6.9%. I said that the actual number for GDP was the right one, and that much of the debate about whether the numbers were correct was done by economists who should know better, and that from time to time some of the houses put out surveys in which they include slow growing industrial data, and that's the slowest growing area of the economy, and they say, hey, this is only growing at 5%, or hey, this is only growing at 4%, so the numbers must be wrong. But what I said was last week, and I remarked in the piece that I wrote, that in fact every 5 years or so the Chinese National Bureau of Statistics actually do a national economic census in which they go to, over the space of a year, they go to all the firms and they survey all the firms in the secondary industry and tertiary industry, and they actually count them and work out what the data is. And every time they've done this, in the last three surveys, the actual data has been higher. The actual level of output has been higher than the published GDP numbers. So statistically, we can say with enormous level of certainty that the GDP numbers are right, and they're not, and they are an appropriate estimate of what the actual level of output. And if anything, what the survey shows is the actual level of output is higher, not lower, than the published GDP number. Well, having done this and gone through this process yesterday, one of you sent me a commentary from an online journalist in which he quoted a Goldman's Economist, and they had their weekly data survey, which was, I think, was called the Current Activity Indicator, which they have weekly data, and this showed that, which has a whole bunch of industrial things in it, and which showed that growth was only 4.5%, and therefore and the argument from the online journalist was, therefore the GDP number is wrong. Now, what I did was I went back and I looked at the actual number that Goldman's lodged for the GDP estimate in Consensus Economics, and I found that Goldman's had lodged 6.9% growth. So the point being, firstly, is if Goldman's itself doesn't believe that 4.5% is the right number, why should we, or why should we online journalists, except that, as I may have suggested before, online journalists are too dumb to know the difference. But we shouldn't be the real growth number. Like I said, is 6.8%, and the real GDP number is the real GDP number. Now, in terms of our own statistics, what we're going to have reported today is the Australian CPI. And what's interesting about that is the survey of Australian economists for the CPI. And what it shows. And what the survey suggests is that the headline CPI for the December quarter will be 0.3%, and year-on-year growth rate is 1.6%. And that's the headline number. But the number that the RBA is going to be looking at is the core inflation number. And the survey shows two numbers. The core inflation numbers that are used here, they're quoted here, are developments of what have been done by individual parts of the Fed in the US. So the first one quoted is the trimmed mean, which in the US was designed by the Dallas Fed for analysing the US CPI. And the trimmed mean estimate, as an estimate of core inflation, is half of 1%. Multiply that by 4 and you've got 2% annualised. But the year-on-year growth rate of the trimmed mean and the estimate is 2.1. and there's the weighted median, and I cannot recall which of the Feds invented this one, but it comes in at the same as 0.5%, and the year-on-year rate of growth is 2.1. I think I've said on television that I think that the real number, that those core inflation numbers might be about 0.4. But whichever estimate you get, what you've got is that in Australian inflation, after that CPI number today, the core inflation number will be at the lower edge of the band of 2 to 3% that the RBA looks at with respect to making judgments on the cash rate. What we expect is a CPI will be published today, which sets up the conditions next week, which allows the RBA to cut rates. Whereas the market as a whole thinks there will be a rate cut by June, I've put in my forecast that could easily be a rate cut next week. We'll find out when it happens. The argument here is that if the core inflation number is falling, then the real short rate, the difference between the cash rate and core inflation, is rising, and if you allow that to happen, you're actually going to slow the economy. So Glenn Stevens, I think, might respond to today's CPI number if it comes in as forecast by cutting rates next week. That's the end of my comment.